Tedeschi, Portfolio Manager at Perspective Wealth Planning with this week's market breakdown video. Unfortunately, the majority of major U.S. indexes failed at a key zone on the charts. We're going to jump in and talk about all of those. Commodities are at a very interesting spot as well. We'll have to jump in and take a look there. Bonds and cryptocurrencies also at some key levels. But what we are really going to focus in on in today's video is the transportation stocks and the semiconductor sector, because those are sending us a signal right now, and we'll dive right into that here shortly. First, let's take a look at the S&P 500. We had a marginal higher high right here from the January bounce, but it failed. This right now looks like a false breakout. Move back underneath 4,500 is not good. The S&P 500 really needs to hold this 4,400 breakout level, or that puts the lows back on deck. The Nasdaq is a very similar looking chart, right? We failed to get up into the top area. This is our resistance zone up in here. That's that topping box that we saw at the end of last year. Failed to get back up into that zone. A tick or so higher than the January bounce, immediate rollover. This really needs to hold that 14,000 level, or that brings the lows back into play on the Nasdaq as well. Next, we'll take a look at the Dow Jones. The Dow Jones concerning because it didn't make a higher high. So this actually still has lower highs in play. That's a clean, clear downtrend. It needs to hold 34,000 right in here, or that brings the lows back up on deck. And then the Russell, a clear false breakout over that 2100 level, right? We spent less than 24 hours above that zone, and that is the key area for this chart. It is very, very clean and clear on this chart. Above 2100 is a good thing. Below 2100, not a good thing. We're back in the middle of the range near 2000. If that breaks, that puts that 1900 back on deck. All right, and we know where the Russell goes, so does risk. If the Russell is headed lower, that means people are pretty much taking less risk with their capital, because the mid and small caps are the riskier area of the overall market. And if you've been paying attention, what has been leading us higher here over the last couple of weeks has been utility stocks and healthcare. The defensive areas in the market are doing much better. Now, we need to talk about the transports. The Dow Jones Transportation Index got smoked here over the last 6 sessions. It's down almost 15% in a week, which is a huge move for this area of the market. The reason why transports are so important, this goes back to Dow theory. If you go back 100 years or so, Charles Dow put the theory out that you wanted to see both the Dow Jones Industrials and the transportation area of the market telling you the same thing. The idea behind that is simple. The transports move goods through the economy, and the industrials create those goods. And when one of those is not telling the same story as the other, it's pause for concern. When we see a 15% deleveraging in the transportation space in 5 or 6 sessions, that means somebody is very concerned that the transportation stocks, the stocks that move goods through the economy, are going to face some major headwinds. And that overall is not a great sign. Now, semiconductors are another way to take a look at this. As technology has changed and gotten better, some people take a look at the semiconductor area of the market in that same light as super important. And the semiconductors really got smoked as well here in that same time frame, almost back to those lows back in March. We want to pay very close attention to the semiconductors. When they are doing well, that tends to be a risk-on behavior, and it is a good sign for the overall market. So 2 of those barometers that we pay attention to, the transportation stocks and the semiconductors, really showing extreme weakness here over the last week or so, and it's something we absolutely have to pay attention to. The Dow Jones Transports is right back into that kind of support zone, that 14,200 zone. You take out March lows, that's a very, very big concern. So we're going to continue to pay very close attention to what's going on over here. Now, let's take a look in at the U.S. dollar in the commodity space. The U.S. dollar saw a pop off of the Fed minute news yesterday. That sort of faded. It was trading right there at that breakout zone, 99.5. Let's pay very close attention to what happens here. One of the most important commodities that we have to talk about is oil, right? Gas prices. The higher they are, the more money essentially is coming out of the economy to pay for the energy needs, which we can't get around. So what happens with oil is really, really important. It's sitting right there on that 95 zone. We've talked extensively about this area for the last year. Above 95, you look at potential higher oil prices. Below 95, you start looking at a move back down to that 85 breakout level that we saw in January. We're going to pay very close attention to what's happening here. Gold trading in a range, a very, very tight range for the last 2 weeks, not really moving. We're going to pay very close attention above 1960. We'll pay close attention underneath 1900, but that is a very tight range. It looks like another move will be happening at some point here in the near future as that continues to coil up. Silver, we're watching it at the 25 level. You take a look at Palladium. Palladium's holding over 2,000. This has obviously been an absolute wild chart. You take a look in at platinum. Platinum's starting to fall back down towards those lows from last year. Underneath 880, this chart no longer looks good in any way, shape, or form to me. We're paying very close attention to see if it can hold this level and make that bounce. Now we want to take a look in at bonds. We talked about this last week. We said we got a little bit of a bounce. We'll see what happens at this 150 level. Well, it ran into the underside of what was support, now acting as resistance, and continued to roll lower and continues to roll lower. 30-year mortgage rates up over 5% at this point in time, right? This is starting to get concerning. We have not seen a real bear market in bonds in 30 years, so there's going to be a lot of theories from balanced portfolio, that 60-40 blend, that are going to be tested here this year, whether or not those actually are wise decisions. If we continue to see these interest rates rise, we're going to continue to see bonds fall, and that, of course, is a bit of a concern. Cryptocurrencies got back up over those key levels at 45,000 on Bitcoin, gave it right back. Ethereum got back up over that 3,300, gave it right back. Now they're sitting right down in that gap from the end of March on Ethereum and Bitcoin, right back kind of towards that 43,000 level. But this is not what you wanted to see in this space. If you were bullish, you really wanted to see that continued move back up and that test of that 52,000. Now we still technically have a higher low that's in play over here. So this chart is not broken at this point in time, but cryptocurrency bulls really want to see Bitcoin back over that key 46,000 level. Not being able to hold it for more than a couple of days, really not the best sign. What happens here over the next week is really, really important. As you can see, we're at a bunch of key levels across the board in stocks, bonds, commodities, as well as currencies. We're going to continue to pay very close attention to what's going on in the transportation sector of the economy, as well as the semiconductors. As always, I hope you guys find this content useful. If you have any questions, please feel free to reach out at mtedeschi@perspectivewealthplanning.com or 814-580-9881. Look forward to hearing from you guys. See you next week. Take care.